Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Recently I haven't been checking the markets as much. I've been really busy with work and family and everything else. But just last night I thought, you know what, let me just do a little bit of research, find out, because this week is actually an important week for the markets and just to see generally where we are. Because if you remember, my portfolio at one point, I think in the last few weeks, has been, let's just go to last month, at some point we were about above 60,000, right? Okay, 60,600, sorry. But right now we're sitting on just 57.5. Why is that? Is because there's so much going on in the market, and that's what we're going to talk about today, just to kind of give you overview of where we're at, what is bringing the markets down, what could potentially happen in the next few weeks and months to come. Again, we're speculating, but we'll see. And then obviously just to kind of tell you where am I in terms of my investments, what am I doing right now, and then I'm going to share with you my updated watch list, okay, and I will share that with you towards the end. Right, so last week Tuesday, we received the CPI. So if you look at this, right, this one here, the CPI for the consumer price index in the US basically rose about 0.1, and the expectation was that it will decline, okay, and that was basically what the analyst was expecting, that was what the markets were expecting, but it didn't, so it went up instead. And that's the day the Dow Jones, I think, dropped 1,200 points. So that was one of the reasons, because everyone was kind of expecting, you know what, things are going to get better, interest rate, if the inflation comes down, the Fed might not hike the interest rate as much as they have said they will, if basically, and you know, because remember what they're trying to do is fighting inflation. By bringing up the interest rates up, the inflation hopefully will go down. But it looks like right now inflation is basically being persistent, is not coming down at all. And when you look at the inflation for example, all items, we're looking at about 8.3% in the United States. We're looking at for food about 11.4, okay, 23, almost 24 when it comes to energy, and when it comes to all items. And if you click any of these things, it actually gives you more details of, for example, the type of food that's actually down and so on. So right now inflation is going up. It's not coming down as much as they wanted to, and the Fed are still hawkish, and they want to increase, obviously. They have to increase the interest rates, okay, and I'll talk about how that impacts in the stock market in a second. But it is really important that we know what is driving the stocks down. It's not generally the stock market wants to go down, okay, and when you look at the last month, the S&P 500 is down about 7% in the last month, okay. Prior to that, it went up quite a bit. Just don't forget that. Okay, so just this month is down about 7%. Now, 7% down for also the Dow Jones, right? And when you look at the QQQ, which basically tracks the Nasdaq, it's also down about 8%. So more or less down about 7 to 8%. But it went prior to that, it actually went up quite a bit. So we are kind of breaking even right now. So it's important to realize where we are in terms of inflation and the other things that are happening. So the other things that are happening is the geopolitical situation in Russia, for example. That's having huge impact in European countries, obviously, in the UK as well, right, in terms of the gases and so on. And it's also the fact is the rise in interest is not great for stocks, and I'll explain that in a second. So in terms of the expectation was this, okay, they were expecting, this was the reality, the expectation was the CPI will come down a little bit, and then that meant the Fed will then hopefully not be raising interest as much. Because right now, if you look at this, the Fed is expected to hike interest rates by 0.75 of a point again, okay, but what really matters is the forecast, and that is really important, because if they come out and then say, okay, do you know what, because things are not coming, the inflation is not coming down as much as we want to, okay, and we are going to again maybe do again the similar sort of thing, 0.75 of a point again, then that's when the market will crash. And I mean crash like maybe drop another 2-3%, no more than that, okay. So it's important to know exactly what is happening right now. So they had started their meeting yesterday. Today something will come out, and in the next few weeks, okay, you will see the markets will be really volatile if they come out and say, you know what, we are going to increase by 3/4 of a point, and then the next one we're also going to do the same or even a whole point. So we will see what comes out of that situation. We will just keep an eye on that. So how will this impact, and why will this crash the markets in terms of the interest rates going up? What tends to happen is the interest rates go up. These companies do not, obviously, then the economy slows down. And when the economy slows down, what tends to happen is, okay, because no one will be borrowing any money because obviously the interest rates are too high. No one will probably be getting mortgage and so on. And the US markets, it looks like it's crashing already. The market, the housing market, if you like. So what then happens is these companies will then start looking at how to cut cost. Okay, and what happened recently was this guy in the CEO of FedEx came out and said, because of the worldwide recession, okay, is looming after the company reported sharp drop of, obviously, it dropped basically 23%. And what he said was, there's a slowdown in terms of shipping, for example, right? So nobody's probably, a lot of the companies are not right now buying product. People are not buying product. Everything is slowing down. There's less demand for goods, because remember, FedEx actually tells us, obviously delivers a lot of these goods that we order and so on. If we are still ordering, if companies are still ordering, everything is still fine, companies are still delivering, right? Then obviously we know the economy is still fine. There's nothing wrong with it. Things are okay. But if FedEx came out and said, you know what, everything is kind of slowing down right now, and that's not just in this country, we're seeing that around the world. And for that reason, okay, but obviously we can't just say, okay, because of that, actually the market crashed that day. So because of that, we can't just say, you know what, because things are slowing down, we're already in a recession. So we have to look at the bigger picture, okay? So again, the following couple of days, people came out and said, you know what, this might be a situation just for FedEx company and not worldwide, basically, as they expected it initially. So that was the other thing that happened. So where are we now? What do we do if the companies that we are investing in basically start saving money? What are they going to do? The first thing they're going to basically do is cut costs. And FedEx actually came out and they said they now basically letting go a lot of people. What that means is, right, remember how recessions starts and so on. What that means is they will now, those people who will be let go, unemployment will go up. Okay, people will stop buying goods and the companies will suffer, and then we're going to be in that crazy cycle of recession for a while. And that's the basically worrying part. Okay, but what we then need to look at is the bigger picture. Okay, is that going to be forever? Should that impact how you invest? Absolutely. Right now, it should impact how you invest and how you look at companies, but it shouldn't change your investment, basically, thesis. It shouldn't change your investment plan and your ideas, the things that you want to do. The general plan should be, you should still be investing, because remember what Warren Buffett has said years ago, okay? So he said, be fearful, okay? Fearful when others are greedy, and be greedy when others are fearful. And that to me, that just means, when other people are worried about the economy and people are selling their stocks and whatever, and they're worried about what might happen to this and that to the economy, then that's the time to buy. If you are a long-term investor, that's the perfect time to build wealth. Okay, if you want to build your wealth, then that's the time to do it. It's perfect time to do it. So you're buying stocks at cheap prices. So if companies that you like, for example, Adobe's just gone crazy in the last few weeks, nothing to do with the recession, but it's something to do with the company itself. But if there are other companies, like great companies like Microsoft and so on, and I'll show you some discounted companies in a second, that you really like, and you know they ain't going anywhere anytime soon, why are you not investing? Okay, I'm not a financial advisor, but I'm just saying, why are you not investing in these great companies if you believe they're going to be around for a long time? Okay, and that is something that we really need to start thinking about. Genuinely is really important that you think about that bigger picture. Sit back and say, okay, will this company be around for another, say, 10 years, if that's your time horizon? And if the answer is yes, is it discounted right now based on the projections, based on the estimates? Yes. If that's the case, then maybe wait for it to be, to drop a little bit further, because I genuinely think in the next few weeks the markets will still be volatile, because what's going to happen soon is the companies will start reporting again, and a lot of these companies will report earnings that are not basically what we expect. They might come out and just say, you know what, we're not as basically as bullish as we thought on the market. We might not be doing this and that, and they might actually reduce their guidance and things like that. And for that reason, it might give us a chance to dollar cost average into these companies. So the moral of this story is, think about the bigger picture. Yes, there's a lot that's going on, where from the geopolitical situation to the interest rates going up to inflation going up. What you need to do, you need to think about the bigger picture. You need to think about your investment time horizon. You need to think about the in terms of buying companies that are discounted at the moment. Obviously, put your margin of safety in place at the same time. And obviously, one thing I keep saying to you guys is, make sure you have your emergency fund ready. Make sure that is taken care of before you do anything else, because you would not invest money in the stock market right now that you might need for the next year or so. If there is money in the market right now, that every penny that I have here, God forbid, I genuinely don't need this money right now. I can leave it there for a long time, because alhamdulillah, I just built a little bit of a cushion for myself. So I do have some savings that in case something happens, I can use that money. I don't have to sell everything that I basically have in here, because I can't sell Adobe at basically £424 loss. That's a lot of money. So what is the alternative? The alternative is just to buy more and hold it. Okay, and that I will explain what I'm going to do with this company and other companies in my portfolio. Okay, so you make sure you have your emergency fund. Make sure you've basically read around what's going on. Make sure you know exactly what's going on with inflation. Inflation is even worse in the UK. I mean, we're feeling it. Everything we buy is obviously costing us more these days. So yes, it is crazy, it is mad, but make sure that you have plan, you stick with your plan, and so on. Okay. One other thing I want to talk about, like I said earlier, is the watch list. So I've updated now, includes a lot more companies, and I'll show you exactly what's going on. So initially I took out a lot of the technology companies, but now I've included them again because they seem to be really cheap right now, and some of them I can't ignore them. So I'm not saying I'm going to add them to my portfolio anytime soon, but I've included them here just to keep an eye on them. I might add some of these companies in the family portfolio, so that might happen soon. But at the same time, in the main portfolio, the one I share with you guys, this one here, I basically obviously might add some of these as well, and continue to add some of these companies. So if you're interested to have a look at this, right, so what I normally tend to do, if you are new to the channel, basically this is my watch list for the from August to October. So at the October, and then I will update it for the next 3 months. So what I like to do is put the companies that I'm interested in, okay, put the fair value according to Morningstar, only Morningstar. Okay, this is the price Morningstar thinks this stock should be trading right now. This is the current price they're trading at, and that's my margin of safety. Okay, so 5 to 15% depending on how risky that company is. So company like, for example, Public Storage, there's not much of a risk, so I put 5%, 5. Okay, so I'm giving myself, oops, I'm gonna mess that up. Okay, I'm giving myself basically 5%. Whereas a company like, for example, let's go to Nvidia, for example. Okay, I'm looking about 15% because the risk is a lot. Company like AMD is a lot. So, but when you look at all these companies, all right, so it's about, I don't know, 12, 13 different companies in there. Every single one of these companies is actually undervalued at the moment, including MasterCard, who's just now became interesting again. Right, so every single one of these companies are undervalued at the moment, and they are, in my opinion, quality companies. You will have to do your own research, and determine what's quality, what is not. But to me, companies like Public Storage that have paid absolutely amazing dividend, have got excellent free cash flow, Medtronics, great products and so on, Lowe's, Broadcom, ASML, okay, and S&P and Global, Nvidia, Advanced Micro Devices. UPS, again, another company that dropped to 4-5% on that day when FedEx dropped. I bought more because it hit my price target. I don't just create this and leave it completely out. I've been buying Medtronics, I've been buying Lowe's, I've been buying UPS and so on. And the reason is because they start hitting my price targets, okay? And that's one of the things that I have been doing. So you just need to create your own list. And then, by the way, there's a few more companies in the bottom there that have not hit that price target, but some of them are getting closer, okay? And I'm just going to wait until these companies hit that price target, and if they do, if I have the cash, then obviously I will be investing. And that is what I'm doing right now. Before I finish the video, I want to mention one more thing. One of the brothers asked me recently about PE, okay? So the PE ratio is important to look at when you look at, obviously, and if the companies are undervalued, overvalued, and so on. But that does not give you the full picture. You need to have the full picture. So I'll give you an example, right? So a company like Nvidia right now has a PE ratio of 43, right? And a company like, for example, Chevron has 10. Now, does that mean this is automatically undervalued? Absolutely no. Because as you can see, this seems about 20, even with my margin of safety, still 22% overvalued. Why is that the case? Because you need to look at the bigger picture. You need to look at, okay, things like the sector, for example. Based on that sector, is this PE acceptable? If this PE was 20 or 30, whatever, that would be really overvalued, because normally energy companies trade around this PE. Whereas technology companies normally trade higher PE. Why? Because they trade higher multiples, because we as investors, okay, are saying the projection for this company or the estimate for these companies, right? It's, for example, they might give us 20, 30, 40% return in the next 5 years. And that's what we're betting on, right? In comparison, oil companies, that's only going to give me 4-5%. So which one would you pay for more for, okay? The company that's going to give you 5% or the company that is going to give you 30-40%. So we're betting on the fact that these companies will give us more total returns than those basically that are trading lower. So you have to look at those things. It's not just look at the PE, it's too expensive, it's too cheap. It's not that simple. You also have to do other things like compare it with the sector. Okay, so for example, I will compare these two companies because they are both in the energy sector. I will compare the material sector. I will compare the consumer discretionary sectors, the industrials, and so on. Okay, you have to do that, otherwise you're just gonna basically say every single company is either overvalued or undervalued based on it. It's not that simple. Sometimes companies have a decline in PE because the company has a decline in EPS. So you have to look at basically the bigger picture. It's not that simple. I'm going to stop there. If you have any questions, as always, let me know. But the moral of this story today is stay invested, think about the long term, buy quality companies that has excellent free cash flow, growing revenue, okay? And if you see a company that you like that's trading really undervalued and you got the cash, put that money to work and forget about it. But most importantly, please make sure you have your emergency fund ready and do not put money into the stock market that you might need in the next, say, at least a year, because things could go south. Sometimes the stock market goes on sideways for 10 years. I think one time, it went 10 years just sideways, literally never went up. So you have to be careful, okay? I wish you all the best. Assalamu Alaikum.